Good morning, traders. Happy Friday and welcome to our showdown. You're in our showdown. If you're brand new, we do some live trading using our Pip Hunter tool. And I have your favorite guest, FxBigDog, here joining us. And we're going to go ahead and go over 5 pairs, analyze the market, talk about it, and put some trades in. So if you guys are ready, we're going to go ahead and start right after this. All right. Good morning. Where is Big Dog at?
Slipping
There he is.
in. All right, traders. Good morning, Cameron. How you doing?
Good morning. I'm doing good. And you?
Very, very good. Just man, I'll tell you something. I woke up this morning and a little bit of chaos going on right now. We got some of our EAs are running memory leaks. Number one, we got to sort that out. But also airlines. The airlines are offline. There's flights being cancelled. I mean, we're talking about multiple places. I mean, just the other day, about a week ago, we had the car dealerships. Most of the car dealerships, they use a certain technology to run their books with regards to payments and payroll and all that. That was offline for a whole 2 weeks. We've had this well, not this morning, but yesterday we had my brother that's playing in the British Open comes and hits a 8 on a par 3. An 8 on a par 3. Man, this is not heard of. This is insane. And Tiger Woods just closed out today with 14 over par in a major open. Listen here, traders. The world's going to, you know it. All right, so let's just take a look and see what's going on with the market this morning as we go ahead and dive into some trade opportunities. Now, remember, traders, for those that don't know, we did have some news out this week. We had CPI news that was important for the Canadians. That CPI number showed that the actual CPI is rising. And just by the way, for those that don't know, inflation is not the rate. That's not really where inflation's at. It's accumulative. So, I mean, you could just go ahead and take a look. We discussed this, I think, a couple of weeks ago, maybe even last week. But you can go to the grocery store, purchase exactly what you did 3 years ago. Look at a comparison between what you paid then and what you're paying now, and there is your inflation. All right. Just take a look at what the exact differences in the amounts. So inflation is definitely a problem, not just here in the US, but across the world. We have inflation issues. And I know that the central banks are talking about cutting interest rates, and some have done already. But the thing is, they're all on hold right now. And that's because they've come to the realization that inflation's not going anywhere until they resolve certain other issues. Now, which is strange, you find that the economy or the world economy is moving into a recession, but yet spending is still up. The biggest problem is the government is still spending a lot of money. The account deficit, if you look at the account deficit, we are in a huge amount of debt. I mean, this is just insane. And the weird thing is, it's such a. I heard a podcast just the other day, and it's such a weird scenario about how things work and how the feds and this is the thing. We think that we're supporting the government by paying taxes, but the government's not really relying on our taxes. Us paying taxes and this belief that we are supporting the government is an absolute it's a false narrative, because what's really happening is that the you know what, I've got to put this into a different you know what I'm going to do. I'm going to actually do a video on this, because there's a lot more detail we have to find out. But it's actually bonds. The bonds are actually, because the feds are buying bonds, the bonds are actually the hold for them to print more money. And so their security is the actual treasury bonds that they're buying. But then they print more money, and when they go, well, what's back in it? Well, the bonds are back in it. It's a roundabout circle, and it's really, really weird. I got to do a YouTube session on this, because it's interesting to know that we think that we're supporting the government by paying taxes, and yet it's not really that issue. We're just putting money in with these paying taxes just to make us pay taxes. It's really, really not what's supporting everything that they're doing right now. I mean, just as an example, if you take a look at Biden's bill that he tried to pass, right? It was had all these things that they're going to do here: build the infrastructure, do this, do that, do that. Well, if it was our tax money that was going to fund this stuff, then why are we printing more money in order to get this done? And so you got to ask the question right here, right? Where is the money coming from? And the only way the money can come from is printing money. So it's this continuous thing about just printing, printing, printing. Now, if we're going to continue moving to a deficit, we're going to continue to not be able to afford to pay our debt because we're raising debt on everything we're doing, then that would mean that the dollar should not be strengthening. So all of the stuff that's happening right now, and just FYI, I know that if we look at the Dow, Dow's behind me right here. If you look at the Dow's pushed back down a little bit off the last maybe 24 to 48 hours, but it is the dollar that keeps climbing that's at a resistance. In fact, I still can't believe that the dollar's at the levels that it's at based on everything that's going on right now in the marketplace. This is just not a normal situation. All right. And so we're going to dive into this morning as we look at some trade opportunities. We're going to dive a little bit more into the details and look and see what the heck is going on. In fact, there's a military term. They call it, all right, what's going on right here? They call it a Charlie Foxtrot. All right, a Charlie Foxtrot. If you don't know what it is, go ahead and search what Charlie Foxtrot means from a military standpoint. So those people that have been in the military, you will know exactly what I'm saying. The markers are actually a Charlie Foxtrot. That's what it is. All right. So traders, let's go ahead and take a look and see exactly what's going on. Cameron, what do you got? I'm going to get you to take over the reins this morning on the first trade. So what are you looking at, my friend? All right, you are muted, man. You are muted.
So I didn't want to interrupt your beautiful speech there. We do have 7 positions in the CAD Swiss.
Mm-hmm.
So let's go ahead and take a look here at the US dollar CAD.
All right. All right. I'm gonna give you the rein.
All right. So first thing we notice on the US dollar CAD, looking at the 4-hour, we have an uptrend movement, looking for specific internal or external liquidity. Here is our external liquidity, buy side liquidity. Go ahead and throw that in there. And we've now come back into this internal liquidity here, which will be our sell side imbalance. Okay. Looks like we're kind of running through this area. So I would expect us to continue to move higher here. Okay. Looking for this external buy side of the curve and hunting that buy side liquidity there. Oh, my mouse is tripping. So there it is right there. But now, do we have enough room? As we use our Pip Hunter tool, we target 20 net pips. That's how we implement these trades using our Pip Hunter tool. It will go ahead and close you out once you've hit that 20 net pip mark. And we have about just over 30 pips to go ahead and target that buy side liquidity. So yes, I am looking for a short-term buy as we're on the buy side of the curve, and I expect price is hunting the draw of liquidity, which would be this external buy side liquidity. So that is what I'm going to do here on the US dollar CAD. It was a pretty simple one here. We could see some sort of manipulation. Now, the only thing we could see is a turtle soup setup here. And if you don't know what a turtle soup is, sometimes what we have is a manipulation where price wants to continue to move higher to the draw of liquidity. But before it hits our draw of liquidity, it wants some sort of manipulation to raid out our sell stops in the market, right? So we have a bunch of retail traders buying on this uptrend. Price would want to come run through these sell stops, take some internal liquidity before coming back to our external, right? Oops. There you go. So what we could expect is some sort of manipulation. And if that happens, if this happens right here, we could see some sort of draw to the downside here, and we could add some positions. Now, I'm not going to go in the market anticipating that we're going to see some sort of manipulation, as this is a show and we're going to implement this trade right now. So because I know the draw of liquidity is higher to the buy side, I'm going to buy. And if we do see some sort of manipulation, that's why we dollar cost average. We add some positions, and then we get our external move to the upside, our expansion move to the upside to our external liquidity. So that is what I'm going to do here with a buy here on the US dollar CAD.
All right. Now that is for a lot of you who are following my trade ideas. You're probably thinking, "Big dog, what's going on?" Hey, listen here, man. The market will do what the market will do, but we're going to manage our positions the way we are currently right now. So whether we are in a long or short, it doesn't really matter. It's how we're going to manage the position is what's going to make us survive. Survival is what we need in order to be able to be successful, right? We have to be survivors. And how are we survivors in the forex market? In the market, survival comes from us being more sort of what's the word, in tuned with what's going on with the bigger picture. And so, with that being said, traders, look at the Aussie Canadian dollar. The Aussie Canadian dollar sitting at the moment right now, we can see here that we have the Aussie Canadian dollar sitting in a beautiful model. I believe it's a beautiful model because we see good directional buyers. If we take a look over here on the daily time frame, we can see that we are on the buy side of the curve. And until, of course, we take out the low. Now, I think we've got a test of that low. I'll have to take a look and see if we actually took out the low right here. And let me see it. And by the way, this to me would be an internal low here. The external low is further down south right here. But if I look at the low here and I pull up the low, and it looks like, yep, we haven't taken out that low yet because this low is right down there. All right. And so we have not taken out the low. We almost came back to retest it. We haven't taken it out yet. So which means traders, which means that we haven't swept the low. I would also like to see some market sweep. All right. And then displacement. So not only do I want to see price actually taking out that low, but I'd like to see the market displaced below that. And that'll then give us a little bit of a pullback and then a further downside move. Now, Cameron spoke about liquidity draws, right? Where does he see the liquidity draw on the pair that he looked at, which is the US dollar CAD? And he said he sees the draw closer to the top. And so I'm looking at this and I see that this is where my ultimate target is going to be. I like to call it my OP level, which is the objection point. The objection point of this model is down here. So therefore, traders, we should be bearish overall. But this is the thing. We all know that the market moves in waves, all right? And so as we go down to the lower time frame, here it is here, and I've just gone to the 4 hour, and I'm looking over here and I'm seeing, okay, here is our wave structure right here. We pull back to the 5-0 retracement, actually just short of the 5-0. But we see here is that low that we're trying to take out. And you can see we got equal low sitting over here. Now, I think we're still going to move further down south and we're going to take out that low and we're going to drop down to this 1.618 extension. And so again, let's see how much money we have to the downside. We've got approximately 25 pips, just enough to be able to take some profit on this. Now, if I look here on the 4-hour time frame, also what I notice here is that I do have a fair value gap. And so traders, I believe that this is going to hold. And so we're going to see the market push back down lower. So with that being said, traders, I feel that we have further bearish movement on the Aussie Canadian dollar. And therefore, Cameron, I'd like you to go ahead and I was gonna say, just like that golfer, smack that shit. All right, I want you to go ahead and smack that button and sell on the Aussie Canadian dollar. Alrighty. Have you watched that? Have you watched that guy, Cameron? I think it's called Nodium or Node.
Um, I think I know what you talk about. It
Yeah,
sounds familiar the way you make those
he is
noises.
a funny ass, dude. He's a funny guy. All right, and
Okay.
he's got his common thing like smack that shit. That's his thing. All right, Cameron. What other pair do we have ready to roll?
All right. So looking at the Euro US dollar here,
Okay,
if you want to pull that up, I'll go ahead and take a look at that pair.
perfect.
And is an internal low here. Okay. Or you can call it external low if you're looking at this model right here. And would say, okay, we're in the south side of the curve here. We had some divergence using RSI. Do I not have my RSI here? It went away. All right. Well, either way, I was looking at it this morning in the VIP, and I don't know where my RSI just went, but
Just double click your chart. Double click your chart. Oh, not coming up.
no, usually it was just right here, but I don't know what happened. But I'm not
You
gonna.
probably
It
you'll
doesn't
have
matter.
to.
Not a
Okay.
big deal. Anyways, divergence had negative divergence. We are starting to see a sell off here, and once again, we're pretty close to this sell side liquidity here. We don't really have that much room, but one thing we do have is internal liquidity here on the 4 hour. So if we go to the 4 hour here, we have sell side imbalance. Okay, right here, sell side imbalance. This would be a key area that price would want to draw to, taking out internal liquidity. Okay, so only thing I could see is some sort of retracement here on this price leg here. If price wants to retrace to some sort of area of equilibrium, okay, that would be the only factor that I would see that price would want to retrace here. We do have another sell side imbalance here in premium. So this could be a key area that price would want to retrace before moving to this internal liquidity that we see on the 4 hour. So what I'm going to do is I'm going to looking at the higher time frame since we dollar cost average. I'm always looking at the direction of the higher time frame and getting the higher bias here for my direction, right? So because I see that, yeah, there might be a short term retracement, right? But I'm going to stick with the internal liquidity here on the 4 hour as we're looking for this sell side imbalance to be an area that price would want to draw to. So I'm going to go ahead and sell. And if we do retrace, we might add just one more position in there and then look for price to continue to move back down to this sell side imbalance. So I'm going to go with the sell year on the euro US dollar. I am not going to hedge my US dollar CAD. I'm going to stick with those directions.
All right, fantastic. Well, you know what, traders, let me tell you something, right? It's always about, okay, and I'm going to say this right now that everyone can listen to me carefully. It's always about balancing, all right? Everything's about balancing. And when things become unbalanced, what tends to happen? The markets tend to go crazy, all right? And that's the same thing with people. When people are imbalanced, and we've seen a lot of that around, all right, what tends to happen? Things start going crazy. People start going crazy. And so you have to understand that's just how the world is run, all right? Things need to be balanced. It's about let's just talk about your own personal life. In order for you to be successful, what is successful? How do we rate ourselves to be successful? It's not the guy that's working every single day, 20 hours a day. That guy he doesn't see success. It doesn't matter how much money he makes. He's not successful if he's working 20 hours a day. Success is about balance. It's about balance in the quality of life. It's about balancing your family time. It's about balancing your work time. It's about balancing your sport or activities like that. It's about balancing everything. And traders, because that's how life is being built, that or at least things have been built around the process has been built around that. Because the process has been built around that, we have to realize that it works the same way here in the market, because the market is people, right? People move the market. People say, no, the money moves the market. But who moves the money? Who decides where the money goes? It's people. And it's based on emotions, right? If people get emotional about the market, they don't feel confident about the market. What do? They pull their money out. What happens to the market? The market then crashes, right? And if people get excited about the market, what happens? They put money into the market, and what happens? It rallies, right? So the markets are built around emotions. People are built around structure. What structure? We need to have balance. And if we don't have balance, we have chaos. So this is the thing. When I look over here on the New Zealand CAD, I'm looking for the same thing as what Cameron mentioned. I'm looking for balance. And so here we have the market ranging. Then we had the market move to the south side of the curve. We saw a nice little trend to the downside, and then we had a reversal. We had MSS reversal here. And then the market went back up and it actually went and rebalanced. Boom, done. Model complete. The next thing, what happened? We now have another. Now, keep in mind, this is an external buy side of the liquidity or buy side of the curve, and we have now an internal structure forming right here. Here we have consolidation. Here we have the sell side of the curve. Price is now moving south, and so what I've got to look for right here, I've got to look for the reversal because the overall is bullish. So if we're in a short-term sell of the curve, all right, if we are at the sell side of the curve in the short term, then I've got to look for a reversal here to anticipate price is going to go up higher. So what's going on with the New Zealand CAD? New Zealand CAD long term is chasing after this target here at 84.91. And so what I've got to look for down here at the bottom right here, I've got to look for reason to want to buy. All right. But I don't want to just buy. I want to buy when there is a setup. Now, the market will take out, just as we mentioned, will take out and draw towards these liquidity levels, even in the short-term downside move. When the market's moving down, we're looking for price to move to liquidity levels, right? And so here is an area that we can see, there's that previous low, and we can see how price is sweeping that area there. All right? What does that mean? It means that liquidity is being grabbed at that point. And so that means when we start seeing liquidity grabs, we're going to see price push up back because what this means, traders, when we talk about liquidity, we talk about sell side liquidity. What is sell side liquidity? It's where retail traders are placing their stop loss, all right? Because they're buying, but they're looking to put a stop loss down below these levels, and that's where price goes ahead, takes that stop out, and then price gets pushed back up again. Because when you take sellers out of the market, all right, or at least buyers out of the market, what happens? The smart money comes in and pushes the market back up. Because why? Because they want to buy price at a discount, all right? When you start seeing this manipulation in the market, it's because the buyers are trying, or at least the smart money, is trying to get it either at premium or at discount. And that's what we have to realize. The market, it's a common saying, right? All right? Buy low, sell high. Sell high, buy low. That's how you make profit, right? And so we talk about these two different zones. We talk about discount and we talk about premium. And so what is discount? Discount is smart money buying low. Premium is smart money buying high. So we've got to start thinking like smart money, right? We cannot be the dumb money and be the guys putting our stop losses at places where we're going to get stopped out. All right. That's a rookie mistake. We don't want to do that stuff. So what we're going to do is we're going to go ahead and look down here and see where the smart money is going. So I'm going to go down. And by the way, this is a daily structure right here. Then we have the 4-hour structure right here, which looks pretty good. And then what I want to do over here, because we're trading on a shorter time frame, I'm going to look at this and I'm going to go, you know what? We're holding at that liquidity area. We're holding there. And so there may be, and just FYI, there may be just a liquidity manipulation right here, and then price is going to go back up again. So what I'm going to do here is I'm going to look at let's go down to the 15 here. And so this is what I'm looking at. I'm going to say that traders, either price, now hear me out, traders, this you've got to listen to this, right? Because this is important right here. What are we seeing right here? We've seen accumulation, all right? We know the three phases. The three phases is accumulation, manipulation, and distribution. And so where do we see the draw? Well, we know that the market has already seen a draw towards that low, all right? But this is what can happen. Either price is going to go up and we're going to make money, all right? Or price is going to come down and we have to add more money if we're buying. We add more money and then price is going to go up. So this is the thing. If I go ahead and I look at this accumulation here and I say we're at support here and I'm good with a buy here. And by the way, we're going to buy. If we buy here at the support right here and price does go ahead and manipulate, we know it's short term and it is manipulation. That's okay. We'll add. But what we do know is that this accumulation right here, the target is up here. And so then if the target is up here, guess what? Price is going to manipulate and it's going to come back up here. So I don't mind going ahead and buying lower here. This is a 15-minute time frame. It's not going to be a long ride. And we're going to see price coming back up here after manipulation. So accumulation, manipulation, and distribution is setting up right here. We're in accumulation. This is not the ideal place to go ahead and buy, but because of our strategy, and that's the difference, because the way we trade the market and manage our positions right now is a good buy for us on the New Zealand CAD. So Cam, let's go ahead and rock and roll. And by the way, traders, you're probably looking at me and saying, Big Dog, this is, you've gone short on the Aussie CAD. Why are you going long on the New Zealand CAD? All right? And there's a simple answer to that, is that we may be hedging, number one. All right? Number two, Aussie CAD doesn't mean because they're trading against the same quoted pair, which is the Canadian dollar, that the base pair, which is the Aussie and New Zealand, may not go in different directions. All right. So this may not be a Canadian sort of drive between the two currencies, but it may, or currency pairs, but it just may be that just the Aussie and the New Zealand dollar itself is what is going to be driving the market. All right. And so maybe it's a hedge. And we get out of one in profit, the other one we add positions, and then eventually we get into profit on the other one and we close out, we make money on both of them. And that's okay. You see, traders, this is a war. It's a fight between the bulls and the bears. And we have to find a good strategy that can get us into the market, profit on them. And if it means we take a little longer to profit on the other one, that's okay. As long as we stick to our strategy and we stay committed to the cause, and we're gonna be fine. All right, cool. All right, Cam, that's about it on those pairs. What else we have here? What else could? Oh, you know what to do, traders? I want to go and throw something out here. And Cam, this is like a little bonus sort of look over here. And I have been speaking about the Euro New Zealand dollar right here. Now, I'm going to go ahead and give you some information on this, but before I do, I want to make sure that everyone knows that our videos, for those that don't know, are being sponsored. And our sponsor, we're going to go ahead and show some appreciation to our sponsor. And let's go ahead and roll the video. Alrighty. All right. So if you don't have a broker, make sure you go ahead and check out ACAP. Great spreads, great company to work with, based in Australia, regulated broker. You absolutely, listen here, traders, there's been brokers out there that have been just actually doing some dirty work. And so you got to really be careful of who you connect with, because if you do connect to the wrong people, unfortunately, you are going to be at risk. And, the markets are difficult as it is to trade. All right. And so the last thing you want to find out is that the broker that you're actually trusting is doing things that just not cool. All right, and I don't really want to mention what some brokers are doing, but I just want to say be careful on who the brokers you choose with. All right, traders. Well, this is the thing. Euro New Zealand dollar. What is going on with the Euro New Zealand dollar? Well, the same structure, right? We had accumulation, right? Accumulation. We had the market move to the south side of the curve. We took out liquidity right here. Price reversed, and we saw the market moving to the buy side of the curve. All right. And then what happened? Price came all the way back up here. Right. It came all the way up here to the top, and it's now gone ahead and tested. Now, I told you early on that I started selling right here because I expected a bit of a downside move. I know you're probably saying, Big Dog, you're going against the trend. Snap, yes. And so the market's pushed back up. So we do see the liquidity up here. So either I'm going to have to wait for price to come all the way back up here, because these fair value gaps right here have been balanced out and price is pushing through that. We saw a little bit of price rejection there, and prices still continue to push back up again. And until we see the dollar falling, all right, until the dollar actually starts pushing down to the downside, this pair would probably still continue to push back up, because as the dollar rises, so will the Euro New Zealand dollar. There's always going to be one sort of correlation that we can match it up with, and I match it up with the dollar. The dollar actually is very similar. Well, the Euro New Zealand dollar moves very similar to the dollar movement. If the dollar is bullish, Euro New Zealand dollar is going to be bullish. If the dollar is bearish, then Euro New Zealand dollar is going to be bearish. All right. So right now, we've seen a little test right here. I'd like to see the closer today. And if we do close out back below this fair value gap right here and probably the daily high of that previous candle, then I would think that this might be the downside retracement that we're looking for to get price back down to about 78.50. So watching this very carefully to see how it plays out. And it's always going to be linked to what the dollar's doing. So if you go to the dollar and you look where the dollar's moving and how the dollar's been sort of like shifting back and forth, if we start seeing the dollar actually continue to move down south and be bearish like we expect it to be, then we're going to see a little bit of a different move on this. But it looks like we might sweep the high of that range first because that was the draw of liquidity. And after it takes out that high, then only then we may start seeing some further downside move. All right, traders. Now, traders, for those that don't know, there are macro hours of the day that we can look at some futures trading. And so Cameron and I are going to bring in a couple of sessions next week where we're going to talk about some setups on the NQ, and we're going to break it down. We're going to look for a trade. We may not find one, but we're going to try and pick up a good structure as soon as. This is why you need to be subscribed to the channel. All right, subscribe to the channels, FxBigDog channel, as well as subscribe to the Traders Network channel, because when we go in to the chart and we see a trade set up based on these macro hours, which is 9:50, it's about a 20-minute window that you've got to trade. When we see these trade setups, we're actually going to go live with that, and we're going to talk that through. And we're going to play some live trades. We're going to see how it works out. And, hopefully we make some money if we got the right setup. But we'll take a look and see how that plays out next week, all right? So make sure you subscribe to the channel. Also smash the notification bell so that when we do go live, you guys are ready to rock and roll. All right, traders. Hey, listen, if you guys are not part of the Traders Network Club, check out Traders Network Club. Cameron runs a VIP trading room. Guys are having a fantastic time there. I look at the community a few times where they go ahead and they're chatting things inside the Discord, and sometimes I can just really laugh because they are such funny guys and they've got such great humor. And that's what's really great about the community. Not only we are professional about what we do and we're making money, because that is obviously our first priority is to make money. But one of the bigger priorities, I believe, and not necessarily the first priority, but one of the bigger priorities is, of course, to have fun while we're doing it, right? I mean, we want to make money. Clearly, that is the case. Don't just have fun and not make money. That doesn't. No one has fun when they're not making money, right? So let's make money and let's have fun at the same time. And so that's what it's all about. So make sure you guys subscribe. Make sure you check out the VIP trading sessions that Cameron runs in his trading rooms. And with that being said, traders, Cameron, you want to say any last words? I've been speaking a lot today. Man, I got verbal diarrhea today. Woo! I think you're muted. You see, that's the problem. Cameron's muting himself. See, he mutes himself and then he doesn't speak.
Yeah. Sometimes my daughter, she has a loud voice, so I have to make sure she doesn't have the whole audience hear her. So, but no, that's pretty much it. I'll catch everyone back for the VIP sessions on Monday. So, that being said, I'll see everyone back Monday, and I know we're holding some positions on the US dollar, and it's looking pretty good now in that direction as we're starting to see a reversal. So, we'll keep an eye on that and see how it plays out.
Excellent, guys. Well, traders, with that being said, have a blessed weekend, guys. We love you guys. We appreciate you guys being here. Share the love and share this video across the board. We'd like to get more people inside these live sessions and build up this community as we continue to deliver and continue to give support to traders that are trying to make this market a success. So with that being said, traders, this is FxBigDog and Cameron wishing you peace, joy, and successful trading. Until next time, happy trading.